Hi traders, it's Amelia. I'm coming to you from sunny Florida with some sunny news on the US economy that we haven't had in a really long time. So today, you probably know the US jobs numbers came out for May, the US non-farm payroll employment report, and jobs rose, which was a big surprise to everybody, but a very positive development. So I thought I would take a look with you at the payroll employment report, and then the latter half of the video we'll talk about some of today's market moves. So let's take a look. Okay, here is the PDF of the actual report from the Bureau of Labor Statistics. You can see at the top, or maybe you can't. Anyway, the Bureau of Labor Statistics, and this is www, oh here it is, .bls.gov. This is publicly available and free. It's going to be the first thing you see on their website. As I explained in a previous video, there's two surveys which comprise the employment report in the United States. The household survey, which is where the unemployment rate is derived from, and then the establishment survey, which surveys establishments, and that's where the headline payroll number comes from. So let's just take a look here. May 2020, so total non-farm payroll employment rose by 2.5 million in May. So that was a great number. It was really unexpected. I had looked at Bloomberg surveys last night, right before the number, or yesterday afternoon, I should say, actually. And they survey all the big banks, the economists across the big banks, the US economists, and the average answer, the consensus estimate, was that payroll employment for May in the US would be down 8 million. Today, right before the number was released, they were reporting Bloomberg had updated its figures to down 7.5 million. This was a huge miss by Wall Street Bank economists. I don't ever remember in my career having such a huge miss. And this number was a huge surprise, really, really unexpected. So the unemployment rate you see here the employment rose by 2.5 million in May, and that's the establishment survey. And if we go down to the chart, there's that huge drop in April that we had. And now you see this little line here, that's our little bit of a rebound now in May. So really interesting. If we go down here to the bottom of the report, this page at least, this is the household survey data, and this is where the unemployment rate is derived from. So the unemployment rate declined by 1.4 percentage points to 13.3% in May. And that's this chart right here that you see. This chart is of the unemployment rate. And you see that huge spike to above 14% in April, and now we've come slightly down here in May for the unemployment rate. So unemployment is still really, really high, higher than the peaks of the last recession. But it just shocked everyone this morning when payroll employment rose by 2.5 million. Let's continue to look at where the job gains took place, what industries or sectors. So we learn here that over the month of May, employment in food services and drinking places rose by 1.4 million, accounting for about half the gain in total non-farm employment. So that makes a lot of sense. Restaurants were one of the first things to open in phase one at limited capacities in the cities or towns around the country that have phase one openings. That was the case here in Florida and where I am, and I did see a lot of consumer demand, a lot of people super excited about going out for restaurants, and restaurants, even though they had limited capacity, did have long wait times, like 2.5 hours to get a table. And that's continued to be the case here now that restaurants are open 50% capacity inside and 100% capacity outside. There's quite a demand for them. That makes a lot of sense. Construction employment increased by 464,000 in May, and that gained back almost half of April's decline for that construction sector. So that's really great for construction. Here you see leisure and hospitality increased by 1.2 million, and that followed losses of 7.5 million in April. So if you compare and contrast construction which made up almost half of its April decline in employment. Leisure and hospitality, we're only starting to see a little bit of a recovery there. And that's the case, I think, with most of the other sectors. Now we're going to look at the revisions to previous months. So when the establishment survey comes out, they do revise previous months. So unfortunately, we had larger job losses than we thought in March and April. Those figures were revised down, so that somehow a little bit counteracts the gains that we saw in May. Total non-farm payroll employment for March was revised down by another 492,000 people to 1.4 million jobs lost in March. And the change in April was revised down 150,000 jobs from negative 20.5 million to negative 20.7 million. So we did have downward revisions, as I said, to previous months, which weighs a bit on this number. If we just look at the actual table of the jobs numbers, here we go. Total non-farm payroll employment change from April to May. That's that 2.5 million total that you see. And if we look at what lost jobs over the course of the month, we see mining and logging really lost the most jobs, that sector. So those are the big ones. Somehow in manufacturing as well, total manufacturing rose, but especially there was some job loss here for electrical equipment and appliance manufacturing was down. Here I'm just looking lastly at who across society in the U.S. Benefited from the job gains, meaning where did the unemployment rate fall. So here the BLS tells us, among major worker groups, the unemployment rate declined in May for adult men, adult women, whites, and Hispanics. The jobless rates for teenagers, Blacks, and Asians showed little change over the month. And we can dig deeper into tables A1, A2, A3. If you pull the release, you're able to see that. I just wanted to point out that with these job numbers today, which were, again, so surprising in a positive way, there's some naysayers out there. A lot of analysts don't understand these data. So they're not trying to be negative. They're just saying if this was surveyed over one period, 1 week in May, which it was, that's how they conduct the payroll survey and the household survey, things hadn't really begun to open around the survey week. And so they're surprised by this positive trajectory here and the numbers with so little open. And so that can reflect a number of things. The data sample has somehow been perhaps not collected especially correctly, and so we'll know next month if these data are revised down substantially. That's a possibility. The other thing that could happen is the policies that have been taken out by the government are actually gained traction early on and have started a recovery. So that would be really positive news if that were true. So we're just not sure. I don't want to say people are questioning the data. They're just confused with how the economy is kind of working right now. And that's really interesting from people who follow this, their whole careers. We'll take a look now at market reaction. Here is the S&P 500. So it rallied today. This was very risk-seeking supportive for equities, U.S. equities today. And you see here the S&P 500. This is a sloping line. I had drawn a trend line yesterday on the chart. And look, we just really ticked up. So the trend shifted even higher, essentially, with these numbers, and we're still holding really solidly above the 3,100 level. We're trading 32.03 right now on the S&P 500. So for the U.S. dollar, we actually had some strength today. The U.S. dollar index that we're looking at right now has had this sloping downward trend. We broke right through earlier. Towards the end of May, we broke through massive support levels at 98.30, 98 the figure. We've been falling ever since as risk rallies, as equities rally. And now we kind of, you see this green line ticking up today. We ticked up in the dollar index today. The dollar was stronger today. Okay, here's the US dollar index intraday. So this is today, and here's 8:30 a.m. and you see the dollar rise when the numbers come out. This is around 9:30 when the equity markets are opening. The dollar index comes off a bit because equities were opening very strongly, and that makes sense. Then we kind of reverse, and we're kind of up for the day on the dollar index. Here's the Australian dollar against the US dollar. Not as strong today as you would expect. When equities rally intraday, normally Aussie's more correlated with it. Aussie is rising today, but just not super strong. And that's just because it's payroll Friday. We're heading into the weekend. People are taking positions off into the weekend, and Aussie's been quite toppy. The dollar's been quite weak. So with some really positive news on the U.S. economy, such as the jobs numbers, people are just taking off those short dollar positions into the weekend. And that's kind of why Aussie isn't as strong as it normally would be with today's equity rally that we've seen. But I think this sets up risk-seeking trades a little bit more strongly for the opening next week, unless we get some bad news somewhere on Sunday night out of the Asia trading session. But this sets up next week probably pretty well in terms of risk-seeking. We've finally got some economic news that a little bit confirms the rally that we've been seeing in U.S. equities. Not the strength of the rally, but a little bit the direction. Some positive news, positive rally in equities, positive news on the economic front. And, you know, the economic news and the equities had been diverging so widely with such a huge risk rally and such bad negative economic news. Now people are pointing to this payrolls as the recovery is coming, and this is the first step in like the confirmation that the recovery is coming. We may be disappointed in that. We need more data to see, but I think this sets up a risk rally nicely for next week. As always, traders, you can find me at www.marketcompassllc.com. Up here, that is my website. You can subscribe to my free content by filling out these boxes here and hitting download, agreeing with my privacy policy. You'll get my free blogs. You'll also get hedge fund trading secrets, 5 techniques retail traders can use to trade and navigate markets like the big hedge funds do. And it comes in a series of 1 PDF and 5 videos stretched out over about 7 days that you can watch and learn the trading secrets and the tips from. The other thing I do is a monthly global macro event risk webinar. And if you go to the products tab and you hit the webinar tab here, you can see the webinar. If you scroll down, there'll be a video here that describes what the webinar is and why it's useful. And all the way down at the bottom, you can purchase a subscription monthly or annual. Your most flexibility just comes with the monthly, of course, the month-to-month billing. And this is good for technical traders and macro traders. We go through event risk and why it's important and how it can impact your trades ahead and what to look for ahead. It also comes with one live monthly webinar, but I do some video updates in between webinars for you on market themes and how they're evolving. So take a look at it. Thanks for your time, traders.